Hi, welcome to the Market Alert for Wednesday, the 7th March 2018. So it's all going on in Washington, but more on that in just a moment. Start off with the pound. This moving lower initially till it was tested. You see the testing there. And then the buying coming in with the green bar. Before, well, we put in a double bottom there as well. You can see the test coming down to the low of this bar as well, which again is one of those that comes off the low, pulls back, and then we're off, and the pound moving higher, which I'm surprised by given all of the Brexit stuff at the moment. But then again, what's going on in Italy with the populist government winning as well. It looks like Europe's falling apart, America's falling apart, and it's just a matter of time, I think, before the debt becomes too much for all of it. It's not going to take a lot to break, or a straw to break the camel's back, given the current climate. What it will be, who knows, but it's just incredible that it's lasted this long. Anyway, the pound remaining sideways and attempting to move higher this morning so far. Might get a pullback. You've got resistance here as well, so keep an eye on that. In the daily chart you can see that prices are moving higher. Volume isn't anything to write home about though, but they certainly are moving back to the upside at this time. And now I've said that, no doubt they'll pull back, but what I would do is go back to, you can see that the market's higher than this first lower high to the left. If you take the next one back and draw this in, you'll see the market again stopping bang on that 76% retracement. As I've said before, it's the most powerful tool to actually use and see where the market's going to find the resistance. I mean, you can see all of these previous ones here as well. So in order to move higher, the market's got to drive through this area to keep moving higher, otherwise it will find some resistance there. News for today, what have we got? Starting off in the UK, we've got the Halifax HPI. This is out at 8:30, showing an increase in house prices. Bostik speaks at 1 PM. I never heard of this FOMC member. No doubt there's plenty of them around, tucked away in the bowels of the Fed. ADP employment change, that's also out at 1:30. This is the precursor to Friday's non-farm payroll figures, and then we've got crude oil inventories out at the usual time, 3:30. Again, I don't know why that's a high impact news item now, frankly, but it still is. And the Dow, well, bit of a shocker yesterday. This moving lower from the off. Must have been news in Washington, which there was, but I think if they knew before, or it's some sort of rumor, it was out. But the Dow off to a bad start when actually it had a good morning. You know, it moved up nice and strong, and then by the time we got to the open, the whole thing just fell apart and down she went. They did manage to bring it back in the afternoon session. Prices were sideways, but overnight you can see the market has put in a gap. I've seen this for a very long time. So the Dow gapping lower, and the reason for this is this news here, that the Dow drops 450 points. Bond yields tumble after Cohn leaves. This is apparently somebody in Trump's administration that was part of the trade sanctions and all the rest of it, and he's I'll find it, oh actually the other bit's down here, or at the top, there we go, you'll see it in just a second. Yeah, and this is the very fellow. Cohen resigns after confrontation with Trump. His replacement will be chosen wisely. So again, you're fired, seems to be the standard practice within the Trump administration. If you don't jump, then you'll be fired. So what a mess, absolute mess. I've lost count of how many people have actually already bailed out on him. I mean, talk about rats leaving the sinking ship. It won't be long before he's taking on water, I think, at this rate. Unbelievable. I don't know how many this is in the matter of weeks. So anyway, that's the reason for The Dow putting in this gap overnight. It's found a bit of support at the moment, but we're back down to the lows that have been made overnight as well. So we'll see how that pans out in the pre-market session. What's really strange though is the implied volatility, because given yesterday's drop, the implied volatility has actually dropped and not increased. It should have spiked up, and yet it hasn't. So there's something very strange going on here with the implied. Very strange indeed. Let's see if it catches up today with the big drop of 269 points on the open there. But very, very strange goings on in the implied volatility there. And finally in Bitcoin, as I said yesterday, this market needs to retrace, and it started yesterday. It's done the same overnight. These are the areas of support you want to look at. I'll just redraw that, just a bit too tight there. You know, you've got the 38, the 50, 61 and the 76% areas there. At the moment we're sitting on the 38% retracement level. But again, this needs to pull back, having moved up quite a bit from 9,200 all the way up to 11,600. And you'll see the February low, and that's not unusual for the market to do that. So again, we'll just wait and see. I also noticed in the news that Coinbase are bringing out a crypto-based sort of ETF type product, which also contributed to Bitcoin dropping sharply yesterday lunchtime as well when they made the announcement. The crypto investors were hoping that Coinbase, which only has 4 coins, Litecoin, Ethereum, Bitcoin Cash and Bitcoin, were going to actually add Ripple to their platform, but didn't. So it caused a bit of a ripple, no pun intended, in the market, and saw the Bitcoin market move lower there, which obviously helped with forcing the correction that's required in this market at the moment. Right, that will do it for this one. If there is anything to report, I'll let you know. But other than that, as ever, thanks for watching. See you in the next one.